So today we're going to talk about conditional gifts and how you can do them in eState. And so I'm going to share my screen, and we'll talk about these kinds of gifts. So just background, obviously, in essence, every gift is conditional on survival, right? So eState knows that. We don't have to put that in for every gift, choose that as a condition. By, automatically it's going to put a condition on everyone's gift that they have to be alive at a certain date, whether it's the survival date or the spouse gift over date or the date when the trust ends or whatever it happens to be relevant to that gift. What we're talking about today is other kinds of conditions that you might want to add. The one I'm going to talk specifically about is our Hotchpot conditions, or conditions that amounts be deducted, et cetera. But we'll also talk about the way eState does asset and cash condition or gift conditions. So let's start with just your regular cash legacy to Libby. So the client says, listen, I want to give Libby money on condition that she does something, okay? So you would just do your gift. You're creating a cash gift to Libby. You'd pick her from the beneficiaries. You'd pick absolute or trust, whatever it is. You'd put the amount, et cetera. Then you'd go to conditions. And there are three. By default, it's set to none, that there'll be no conditions on this gift. We have deduct prior advances, which in essence is Hotchpot, or other, because the number or the kind of conditions you can put on is basically unlimited, right? There's who knows, you could come up with some condition, but whatever we want to put in, we'd click in other. And here's where we would want to create that condition, whatever you want to say. So what it's going to do for a cash gift is, before it makes the cash gift, it's going to produce the condition. So if the condition is, if it is after, if I die after 2025, make this gift, okay? That would be the condition on this gift. Okay, so it would say, if I die after 2025, make this gift. So let me just show you what that would look like in the documents. So let me just do this. So I'm just generating the preview of this. And this is what I've just done here. Oops, sorry. Because I typed in, if I die after 2025, that's what gets printed here. Now it highlights it so that, because often you won't put it necessarily incorrectly in here. But one of the great things about the viewer is I can see what's going to come out when I put this in and know I've drafted it correctly or not, okay? So you can put in any kind of condition here, and then it's going to appear at the beginning of the gift, okay? That's pretty straightforward, and you can do whatever kind of gift you want, or whatever kind of condition you want. So any questions about that adding conditions to cash gifts? Of course, you can make it as long as you want, and I'll just keep going. All right. Well, we'll move on. So the next kind of condition, you might want to put on a condition for before an asset gift is given. So again, you'd set up your gift just the way you'd normally do. You'd pick your beneficiary, you'd pick your type of gift, you'd pick, whatever asset, it would do it automatically. And then we've got the condition. Now here we have other kinds of conditions that I want to take people through. So and maybe what I'll do, just to do a more realistic example, is I want the home, okay, to go to Billy Smith, okay? And now I've got some conditions. So there's a few conditions, obviously. There's the assumption of the mortgage. That's going to go in by default. Why? Because by default, our law is that that a devisee of land with a mortgage assumes the mortgage. But if you didn't want that, you could uncheck this, remove that as a condition. Okay, but by default, it puts assumption of mortgage on as a condition of the gift. There are a few other conditions that get attached that are more often used with asset gifts. Because, for example, if you've got an asset that you're giving away that's going to trigger income tax to the estate, you might say to that you want the beneficiary as a condition to receiving the gift that they pay the income tax that gets triggered on your death with respect to the asset that they're receiving. So if that were the case, you can just click payment of income tax, and that will, and I'll show you what that does. Similarly, you could make it conditional that they pay any probate tax on that asset with respect to that asset and reimburse the estate. So those are two examples. And then, of course, you could put in, and we'll talk about Hotchpot in a second, but then you can put in some other gift, which is, on condition that, on condition that they are drug-free or some, you could blah, 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 blah. Whatever condition you want to put in there. I'll just show you what that will look like in eState with the document generation. So this did that, and it said, put in the condition of the drug-free or whatever other condition you want. Paragraph 3 is the assumption of mortgage. Paragraph 4 talks about the condition that they pay the income tax and the estate administration tax, right? And then it deals with what happens if they don't, et cetera. So that's how eState would handle those kinds of conditions. And, that's, if you're talking about mistakes that we can make, and we've, giving away asset gifts are very fraught with complications. You have, and we've done this presentation before. If you've never seen it, it's really a worthwhile one. It's called something like simple gifts, and then it's kind of crossed out because it's about asset gifts and all of the 21 items that you got to worry about when you make an asset gift. Now, eState reminds you of those, but nevertheless, they're complicated. So, in any event, that's how eState would handle that kind of gift. So again, you could go in here and change it and see what other, however you wanted to draft that condition, it would appear as an independent paragraph. Anything on those kinds of conditions? If I didn't do that, for example, let's say I took that off, there'll be reminders to, to determine whether, if it's not a principal residence, they would talk about the tax implications, et cetera. So you've got to, it'll remind you of that kind of stuff. It'll also remind you to do a title search if you're giving away land and things like that. Are there any questions on that side of things?
There seems to be a question in the chat.
Oh, okay. Thank you. What condition would be appropriate to make a gift to a spouse if that gift, what condition would be appropriate to make gift to spouse of beneficiary if that beneficiary is not alive? So let me give you an example. If I give a gift, let me just see if I have somebody in my family. And this is some conditions, in essence, we put in automatically. And we're going to work on maybe notifying you of that. But as an example, where I've got a person, let's just see our people. So let's make Ingrid married for a second. So we're going to add a spouse to Ingrid. Oops, I got a Jimmy Smith. If I made a gift to Jimmy Smith, as an example, let's go there for a second. So I made a gift to Jimmy Smith. whether it's a gift over or whatever else. What eState is going to do, and I'm not sure I've set this will up properly, but as a condition, give me 1 second, and I'll show you what I'm talking about. It's going to make a condition that the spouse can't have been separated at the time of death. So let me just go to that section. So it's going to automatically make a condition in the definition section and interpretations about a gift to a spouse of a child. Okay, so it will do that, and you may have to edit it depending on your circumstances or whatever else, but it's going to automatically recognize that you probably want that condition on that to a spouse of a child. The same would apply if I did it as a gift over. If I said, okay, to Ingrid, and then if Ingrid's not alive, to Jimmy, it would put this clause in there automatically. All right. Hope that clarified that, Mark. If it didn't, maybe just unmute and jump on. But that's how eState deals with if it sees that kind of gift. All right, so let's talk about Hotchpot for a second, and I'm going to deal with that in the residue. So if I've got a situation where, and I'll just go to the section of this. I don't know if I created one with a Hotchpot in here already. Okay, yeah, I did. Okay, let's pretend we didn't do a Hotchpot as to start. So, so we create a gift to a beneficiary. And what we want to do is we want to deduct prior advances from that amount. So they got money either before the will was drafted, or they might get money after the will is drafted. And you want to protect that, that amount and deduct it, in essence, from their share. That would be a condition, and I'll show you how to do that. That would be a condition that's a deduct prior advances. Okay. So we want to give, in this scenario, and I'll just show you what we're doing here. Let me just close this for a second. In this scenario, we wanted to split it between the two kids, okay? But we wanted to take Ingrid to take off whatever she's received prior to death, and Libby to take off whatever she received prior to death, deduct it from their share. So how would we do that? Well, the best way to do that, if you're going to do a Hotchpot, is to do separate gifts for each person. Especially if the Hotchpot amounts are different. So for example, Ingrid, I gave her 100 grand, Libby, I gave her, 200 grand. I want to equalize that, and I want it to draft it that way. So I would recommend that you do, rather than one big amount divided equally, that you do it as separate amounts, because you're going to want to have a Hotchpot clause for each person. So for example, Ingrid, she got 100 grand. So we'd create whatever gift we wanted there. And then we'd go to condition, right? Which would be none, set by default. Then we go condition deduct prior advance, because we want to deduct the 100 grand that we gave her. So the current amount is the amount that we already advanced to her. So that was 100 grand. Okay. Do we want to include future amounts that the client might give her or not? So often we do, right? We gave her 100 grand, we might give her future, and future ones we want to count against her share. So we would include future amounts. Do we want to include interest against that amount? Often we don't, but sometimes we do. We can click on include interest. We can include the deduct from gift over of beneficiary share. If Ingrid's not alive and her share is going to her kids, should the 100 grand come off their share? Often that is the case. And then you can have another provision as well. You can add sort of a custom clause that you want. So if we did that, for example, and for the second person, we had a different amount. Let's say this person, Libby, we haven't advanced any money to Libby yet. Okay, so the current amount is 0. So we'd set it as empty, but we do plan on giving her future amounts. So we're going to include future amounts. Okay. So let's do that. Let me show you then what this is going to look like. So let's just generate a preview. Should have actually made it rather than a trust gift, just an absolute gift to be shorter. But let me show you what it does. So it's going to say, as soon as it sees that there's an equalization, like a deduct prior advances, it's going to add the words in paragraph 15, subject to the Hotchpot provisions, and then reference that paragraph. Okay. So when it's dividing the residue, it's going to say divided, but have it subject to the Hotchpot clause. So what's the Hotchpot clause do? Well, it adds this paragraph and it says, adjust the residue as follows. And then it says, as of the date of the will, it adds that 100 grand to Ingrid. Okay. And the fact that I might advance others. So the existing advance and the future advance should be deducted in essence. Okay. And similarly for Libby, we didn't give her any money as of the date of the will, but I may make advances after the date of this will. So it's taking account only of future advances. So it does the same. And so that's what I would recommend. If you've got, if your clients say, I've advanced monies, different amounts to different kids, I want to take those into account, or I'm going to, or whatever in the future, then use that Hotchpot clause. And I do recommend that you do it in separate gifts rather than the alternative would just say divided equally among my kids. I'll just show you what that does, okay? Just as an example. And let me just do that. Oh, there's a hand up. Tim?
Jordy, in my scenario, there was the person making the will made a loan to one of his daughters.
Right.
And he wants that to be forgiven when the residue is divided equally between his 3 kids.
Right.
Is that considered in the same scenario that you're doing here? Is that considered like a deduct from prior advance?
No, because you want it forgiven, right?
Yeah.
So
yeah, exactly. Completely
yeah,
different.
you'd actually put in a forgiveness. You'd either, if you're forgiving all of the debts, you would go to the provisions tab and go loan forgiveness, and then forgive it, children's loans.
Okay, provisions tab. Okay.
Yeah. Okay.
Thank you.
Because you want the opposite of a Hotchpot clause. You don't want it counted against their share.
Exactly.
Yeah. So that's the way a Hotchpot clause works. I think I was going to show you what would happen if you did a class gift with a Hotchpot. So if I did that, let me just show you an example of that. So I say a class, so to 2 people, but I want the Hotchpot class, I want to deduct prior advances. It's not going to understand that you can have different amounts to different people. So that's where, that's why I prefer to use it as separate ones. And let me just show you what would happen in that situation. So it did this. This is what the Hotchpot clause you get if it's a group, if it's a class gift and you haven't done it individually. You're going to have to fill in some of the information. So I may make advances to the residuary beneficiaries referred to in whatever period. So you got to add that in and things like that. So that's why I don't like doing it. It's better if you do it this way with each individual one, and then it's going to put in their name and all of those other things. I mean, it'll still work. You just have to do some editing. Okay. And we do have on our list to try to figure out a way that would work better. So you have to do less editing. Prior advances is not considered as a debt in estate. Well, the thing about advances is it covers things that are not necessarily loans, right? So you can advance money to someone and it's not a loan. It's a gift, for example, or it's just not documented in any way. And often that's what happens. They say, listen, I just gave them 100 grand. It's not, I don't have any paperwork on it. I didn't put in a mortgage. I didn't have a promissory note. I have nothing. I still want to count that against their share. And so that's the point. So Hotchpot can work both as to cover debts and actual debts that are documented and legally enforceable, and advances that are not legally enforceable either. So that's the idea, because often it's not, they've done, I gave $100,000 for renovations to one kid, that I do want to count. So that's the point there, and that's really the purpose of a Hotchpot. If you had a legally enforceable debt and you didn't have a Hotchpot clause and you didn't forgive that debt, well, that's an asset owing from that person. They got to pay it into the estate. So by definition, that's works like a Hotchpot clause. But a Hotchpot clause is really to cover things that aren't legally enforceable. Did I explain that well enough? I don't know, but I hope that made sense. So James, if I didn't or whatever, just feel free to jump in. So that's really how you do Hotchpot clauses. That's probably the most common condition for gifts is a Hotchpot. So I hope that made sense. Any questions? Are people using the viewer? I'd love to hear if you are using it live, and if it's working fast enough for you, or any feedback on that.
I haven't used it live. No, I just download and just work from.
Try it. It'll save you some time because it's live, right? So you're working on it. Just click the eye and then pull up whatever document you want to see. And rather than generating it, you can see it live and make changes. And as you do that, you can see, and we're working on the speed idea, but you can see, and it'll save what spot you're at. So if you've made changes to the Hotchpot clause, you can go in there and return to it, and it'll take you right back to where you were. So I'm certainly using it to save time when I want to, rather than generating everything, I find, I forgot to do this or forgot to do that. I can check it out before I generate the document. So is anybody else, just out of curiosity, is anybody using it? Please unmute and tell me if you are. Uh-oh.
Just too new. It's just too new, Jordy. I haven't had the chance or the time to actually work with it.
You don't have to do anything. Just keep it. You can do your planning on this side. Just click on the eye and have it going, right? You can just have it going while you're doing all your planning. Just have it open. And, as you do your planning, and then you can just refresh and have a look at it. So it saves a lot. I've found it to save a lot of time, and I know, what's going to come out before, so you can go back. Oh, no, this isn't what I wanted it to say. Right. And so I just go back into that gift and change it and refresh. Okay. That's what, now I'm fine. Now I'm finished with it. Now I'm getting what I want from it. And so that's really.
Sorry, do you have to have a different plan? Because there's a message in there that says need to change plan.
Oh, you have to have at least a flexible plan. You can't have the old plan. Any flexible plan now or greater. So flexible or the growing plan or professional. Yeah. Yeah. So if you have the old legacy, just if anybody's on the old one, the original $19 one, it's not accessible because we're going to be one day getting rid of that. And we have the $99 one, which includes one will every month, and you can carry it over. So basically it's, we figure that at some point you'll do 12 wills every 12 months on average. And so you get to accumulate. If you didn't use eState 1 month, you now have 2 free wills, et cetera. So we add a free will to your thing every month. So
that feature would be in that pro, because I have that one,
is,
the $99 one. Okay.
Yeah. But it's basically you get a free will. It's almost zero. Like it would be the equivalent of not paying anything if you're doing 1 will a month on average over a year. So, because it's $99 and that's what a will costs. So, and we have other features that are coming out that are also going to only be accessible on those. So, yep. And what we did, so for those who are on the flex plan or thinking about getting off that $19 plan, we now have this rollover of the 99, the free client. So because we know that some of you only 1 month you'll do a will, the next month you won't, and then the next month you'll do 2. Well, you get to accumulate these free clients they roll over. So yes, Abram, thank you for sharing that. So that's, does that make sense? If there's anybody on that old plan who wants to talk about it, just feel free to stay on, and I'm happy to talk to you about that. But this viewer is really, for me, really like knowing what's going to come out is, you know, I mean, one of the big problems with eState, I think historically, was you weren't sure exactly what was going to come out. This way, you know what's going to come out before you generate the document. So.
Do you mind if I ask a question not particular to this,
Sure,
something
absolutely.
else? So I was just started out in the program. Is there, I didn't see a particular conversion of assets clause. Is it built into the trustee powers or something? I didn't see a particular clause separated for conversion of assets.
You mean sale of assets?
Just, I find that my prior firm used to have a paragraph called conversion of assets.
Yeah, it's under the administrative provisions. It's the first
Okay.
one.
Okay.
Yeah, I mean,
I saw some
just
similar
means,
wording, but wasn't sure.
Because it's you may not want to convert it. It's a power. You can convert it, but it's right here. Sell.
Yeah, that's
option.
where I thought. Okay, good.
Yeah.
Okay.
Yeah. And don't forget that just a reminder that you can edit your powers, you can edit your definitions, you can put in your own, you can choose, you can include, you can exclude. Those are all available for those who are relatively new. So for example, if I'm doing this, I get to pick what admin provisions I want to include. So for that sale, the one you just talked about, Sandra, by default in the short will, it uses this clause, right? So this is kind of the conversion clause, but you could put in our more fulsome one, or you can paste in your own and it'll print it with yours. So we have a lot more customization that we never had before.
Yeah, there's a lot to learn.
Well, we're here. So just to refresh everybody, don't forget this question mark right here. And that's our help desk. So if you're not sure what to do about customization, you can type that in and it'll tell you. We also have our live chat. And so if you have questions, just reach out to us. We'll be right back to you.
Jordy,
yeah.
Could you give an overview of when you would use the long form will as opposed to the short will? Some thoughts on that? I know you can compare them, but it's hard to get the brain to grasp.
Yeah,
I mean, situations that the long form is more appropriate than the short.
Yeah, so if you type in short will into help desk, so with that question mark, we have this whole thing that compares them and sort of tells you, and then we have a Google sheet that shows you what changes are in and out. And we also we have a webinar as well on when to use a short will. You're not going to use it if you've got, complicated trusts, or, I mean, it'll work, just so you know. Any of the dispositive provisions, any kind of gifting, any trust, any fancy residence trust, any kind of trust, it's going to draft it the same way. So it's not like you're going to lose anything there. What you're losing is some of the administrative provisions, some of the definitions, those kinds of things. And Michaela can send you that link as well. So they're also fully, remember everything's customizable. So you could make your short will a lot longer. You can make your long will a lot shorter. Right?
I'm concerned that clients get overwhelmed by even the short will, and when it's beneficial to overwhelm them more with the long will, let's say.
Yeah, well, you can make your short will even shorter. You can just get rid of all, a bunch of these class admin provisions or that kind of stuff. So, and we're making everything customizable. So even the gifting is going to be more customizable. And so, yeah, we're working on it right now. The reporting letter is not yet customizable. we're working on it, and we're trying to, believe it or not, letterhead is a major problem. Trying to get you to get your letterhead on there. I wish I had it's been on our list for a long time, and apparently there's a lot of work to be done. So we're working on it. We know people want it. So. So that's 1 o'clock. Thanks, everybody. I hope this was somewhat useful. And don't forget to use the question mark. We're here. Michaela's here. I'm here. We don't want you struggling. So if you want, Sandra, if you want another tutorial where we run through a file with you, anybody wants that, feel free. Like we're here for you. Okay. We don't want you trying to figure something out without, guessing. That's the idea.
Thanks.